Good morning, everybody. Happy Tuesday. This is Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. A lot going on today. You can see that the markets are trading higher. Do we have any new developments from Ukraine? I think we do. The question is, do we believe it? That I'm not so sure about. So we're going to talk about that. We had a slew of 13F filings out overnight. Warren Buffett's filing hit, so we're going to talk about that. We have some more M&A to discuss. We will discuss the biggest movers of the morning, a couple earnings on our radar, take questions from our chat, and Michael Pachter is today's guest from Wedbush. He is a video game analyst. He'll be on at 8:35, so hit that like button and grab some coffee, and let's go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Yo, what's up, everyone? What's up, Joel? What's up, Dennis?
What's up? The market, baby. We're up 68 3/4 handles at 44.6275, just off the pre-market high of 44.68. I know everyone wants to short this rip. I'm having a hard time finding resistance on this chart. Let's move on to crude. This is not good for crude. Down 308 at 92.39. What else? We got gold slipping 18.20. No chaos. Not good for gold at 18.51.70. Silver down 53 cents at 23.31. Everyone's buying. Might as well buy some Bitcoin. Up 21.10 at 44.315. And Ethereum futures, they're going the same way. They're up 7.85%, $227.50 at 31.2450. But before we get started, we got to come over the breaking news. It wasn't brought to you by Benzinga Pro News Desk. It was brought to you by Triple D.
What did I break? What did I break this time?
Warren Buffett is doing risk arbitrage.
You got to start with my bad joke. We need to bury that. We need to bury that. That was a bad joke. And multiple people on Twitter pointed out to me that I'm an idiot.
On the spectrum of bad jokes, that was not.
That was okay.
I thought it was good.
Okay, so back it up. We get, obviously, the filings. We see Warren Buffett's new position. Activision Blizzard is in there. And it starts blasting off last night. I was like, what the hell are they buying Activision Blizzard for? Because Buffett bought it. I mean, one, we both know this was probably bought before the quarter or before the filing.
Should we explain that again?
45 days old. Old news. Warren Buffett is obviously, and I was saying it's a value stock, and it was a value stock. And Warren Buffett had perfect timing on this, though. Talk about his timing, though. He bought it, and it got bought out like probably a week later. That's good timing, Warren. He's solid.
Look at this. He was buying.
So hot right now.
Look at this. Like he was like 45 days ago, right? That's like a month and a half.
We know at least, we know about 45 days.
Look at that. Look, he was like buying the dip.
Not even,
He was saying, hit my bid, hit my bid, hit my bid, hit my bid. And then this is when the algos started sniffing it out. That's when the algos caught on, right? Algos. So he didn't want to buy into that. So his average price is probably like 63.5 or something like that.
So remember two things. One, he could have already sold it. Two is, this is a deal stock. It's not going to take off. A lot of times we see Warren Buffett buy a new stock. It blasts off 3, 4, 5%. But this is already a deal stock. This is trading off of, we know when you get into risk arbitrage, it's going to trade off of, interest rates to a certain extent because of the time value of money in there. And then the risk of, obviously, the deal not going through. So we know there's significant discount being priced in for that right now because the deal price, I believe, I've already forgotten. I think it's about 95. And it's a cash deal. So there's a significant discount to the market, the risk arb, saying that this deal could potentially get blocked, and it could. So in any regard here, it isn't going to have this big 3, 4, 5% pop because Warren Buffett bought it. So it popped on the initial. The algos, they're all dumb. They all bought it. I actually shorted it on into the pop, but then I covered it, and then I covered it like literally like 5 minutes later, and then I just threw out a tweet after I do the trade because I never usually tweet. I don't like tweeting when I'm in a trade, but then I was done the trade, so then I tweeted out just for fun. Is Warren Buffett getting into risk arbitrage? Just because I thought it was kind of funny. But anyways, multiple people point out to me that I'm an idiot and I don't understand. So that's Twitter. That's the love you get. But what I've learned, and this took me a long time to learn, is Spencer, you're right. You got to kill them with kindness. I used to get into like fights, on Twitter. Like somebody would say something, you're an idiot or you're dumb or you don't know what you're talking about. And I'd be like fighting back. Yes, I know what I'm talking about. What do you say? I don't know what I'm talking about. I can send you my resume. You don't say that. You don't do that stuff now. You just say, thank you for your opinion or thank you very much for your comments. I appreciate them. Have a nice day. And then it ends it usually. And then you don't have to worry about it. And it makes you feel better about yourself too. You don't engage. Don't engage with the haters. That's the main thing. Sometimes you can't help it though. Joel, you like to engage with the haters sometimes too, don't you? No, you don't? Joel never engages? You're on mute, Joel. Wake up.
Wait, yeah. Joel, I didn't do that. Joel muted himself.
I did that myself because could you get mad at me when I take a drink of water? You go, everyone can hear you taking a drink of water.
Slurp it.
I should get a straw.
Here.
No. Well, first of all, in our family, we have like the 24-hour rule, Like if someone really like pisses you off and you really want us to have that, we institute the 24-hour rule. And it's like
Let it simmer.
Yeah, you simmer. And then you wake up the next morning and like you forget about it. So on Twitter, like you start things, like you include me in some of your controversial tweets.
Oh, I tweet controversial stuff. So it's going to, like nobody likes hearing something bad about their stock. So when I come on like Peloton and say, okay, it just popped 25%, I'd be taking profits if I was in the stock. People are going to fight me on that because there's certain people that are in the stock from like 80 or 90 or more, and they are of a different opinion. You were even fighting me on that one, Joel. But I mean,
and I was right.
When you tweet about stocks, it's a controversial subject because there is people who are along these stocks and they don't want to hear something negative about the stock they own. They only want to hear positive commentary. But we're in a market, and sometimes it's positive, sometimes it's negative, sometimes we're bullish, sometimes we're bearish. I'll give my opinion. You want an opinion? I'll give an opinion. And if you don't like it, well, then usually you get some hate. If you say something negative about any stock, though, guaranteed you're getting some hate back because somebody out there will read it that owns the stock and not like what you said.
Okay, can we go through the rest of Warren Buffett's moves?
Sure.
He bought some Activision. Again, this is all last quarter, so this is from
he's probably already out.
the October, November, December period.
But he's a day trader too, Dennis? Is that breaking news?
They'll say, Warren Buffett's only long-term investing. What do you mean he's a day trader? That was a joke too. Sorry, that was a joke.
Let's go through his new positions that he took that were new as of the end of the year. Activision, we talked about that already. New holdings, ticker NU. And now the reason we're starting with Buffett is because Warren Buffett is, broadly speaking, the only guy with the influence to move stocks on his 13F filing.
Right.
So you're going to see new trading higher. We just talked about ATVI trading higher. Here's another new stake.
Again, ATVI, just to go, don't be chasing it up like 30 cents a day, thinking it's going up 5-6% because Warren bought it. It's a deal stock. You're in a risk arb stock. It's not going to have, Warren Buffett isn't going to have much influence, if any, on this stock.
Yep.
So the only reason it's trading up a little bit is probably just simply the market is up overall. And here's one thing, just taking it back. I'm sorry to go on the tangent, but I just want to teach us one thing. You've got, obviously, stocks are all up. There's a certain tracking that a risk arb stock that has the potential for a deal to not go through that will follow the overall market. There's a certain little portion of it. And the reason for that is if the deal doesn't go through, well, today is still a good day for stock. So Activision on its own would be up a little bit just to bake in the fact that if you priced it without it. Understand? Kind of follow my concept on that?
I do.
If Activision was if Activision was just not in the deal, it would go up on a day like this. So it's going to go up just a little bit because if the deal broke up, well, that means Activision's worth a little bit more today because the market's moving up. So you do see Activision track the market just a smidgen, but a lot less. But the main influence on Activision is time value of money. and the potential that the deal doesn't go through.
And
That's your
just
risk
to,
arb.
to illustrate your point, the SPOOs are up 1.45%, while ad division's only up 0.38%.
It's not going to go up much today.
Right.
And that's for the simple reason, even off the Warren, it might be off Warren. Maybe, it's getting some media attention. A couple of people are excited, but you just don't want to be chasing deal stocks because Warren Buffett bought them, because it's nothing to do with it.
Okay,
Right.
so
Sorry, back to Warren.
It's okay. 3 new stakes last quarter: Activision, new, and my personal favorite, FWONK, FWONK, Formula One. Like great minds think alike.
Wait a sec. What?
Great,
Formula One?
great
Yes.
minds.
Is that right?
Great minds think alike. I also bought this stock. New stake.
You had it inside. You had
Wait,
inside information.
So FWONK, he bought FWONK?
Yeah,
I
just
didn't
a-
see.
just
Where
a-
was that one?
Just a little bit. Wait here. Let me check.
Is
the
it a
top.
new stake? Because it's not trading up. That should be trading up. That's
I
what I'm
got it
challenging.
right.
I didn't actually. I'm bad. It was trading
It's-
last night, and I didn't actually read the disclosure of what he
So,
bought.
so the reason it's confusing, and here, let me
Okay, yeah. Explain to me why the market's confusing.
I'm
Because it's
just
not
gonna
trading up.
I'm just gonna show you like the actual table. This is the actual table, right?
Show me.
This is the filing itself. The reason it's confusing is because Liberty Media, there's 4 Liberty Medias,
Oh
right?
gosh.
man.
Right. So this stuff, this is not new. All these Liberty Medias here, those are not new. But this is a different company, right?
There's too many Liberty Media stocks.
Yeah.
I'm going to protest to the regulators to get rid of a couple Liberty Media stocks.
It
And they
is-
all have 5 symbols too, Joel. It's too many for a trader to type in.
It is confusing. But I believe I mean it's a different company. For Formula FR, he bought the class C, FRMLA. That's not the ticker, but it is confusing. But I believe that's what it's referring to. For Liberty Media Class C. That's FWONK. So anyway, that was in there as a new stake. The rest of this is not as hard to understand. He liquidated 2 stakes. He liquidated Sirius, and he liquidated Teva. TEVA. As far as adds and reductions, he added to his stake in Chevron. He added to his stake in Floor and Decor, which is ticker FND.
Yeah.
He added to his stake in Restoration Hardware.
He's in Restoration Hardware?
Look right there, Dennis, RH.
That's got to be not a Warren pick, because he's got the other people in there too. What's the PE on a Restoration Hardware? Maybe it is. Maybe it's lower than you think.
You know what? The Teva was not a Warren pick too.
Yeah,
It was that guy that used to work for him.
Yeah, that other guy screwed up.
Yeah.
Warren
the
that
wouldn't-
was-
PE, the PE on RH is the forward PE is 16, Dennis. So
Oh, so it is a value stock. That's crazy that Warren. Me and Joel have never understood that store. You go in there and you feel like you're going into an antique store, and every single thing you touch is worth thousands of dollars.
yeah, it's amazing.
So I guess the rich people like it. Maybe me and Joel were just not rich enough to appreciate all that stuff.
All right. As far as what stocks he did a lot of selling. He did a lot of trimming last quarter. Although
Warren, I'm telling you, he's a day trader now.
not in the one stock Joel was going to hang his hat
He
on.
never sold any Apple?
He didn't touch Apple.
I got to call him later.
did not-
How much? Okay, stop. Somebody last night, go into the filings. How much of Berkshire Hathaway is now Apple? Because he's no longer diversified. Do we have a percentage of what this is in this portfolio?
Well,
Somebody said it was 48%. Is that
Oh,
accurate?
Warren.
really?
Somebody said that on Twitter. I'm not sure if that's accurate. That's why I'm throwing it to you. Maybe do the math on that
I
today.
would have to do the
Can
math.
chat verify that? Is Berkshire Hathaway holding 48% Apple now?
Mitch has something on
So
this.
it
Before
was
this, it was
Yeah,
40. It was
it-
at
it-
40 before this.
it was 44 before this. It was
It was 40. Oh, so it probably is. It's probably right. 48% of one stock?
Yeah.
That's so unlike him. Like,
Yeah.
I mean, it's grown into that. Obviously, it's all grown into that. But you're right, Joel. Like, you'd think he'd start trimming that. Because now, and you can see the correlation here, which is, I've noticed it for a long time. I mean, bring up Apple and bring up Berk.B on a chart. And you think your Berk.B, I mean, you're buying when you're buying Berk.B, you're buying half Apple.
Yeah.
And the charts follow each other. Like if you put the dailies, there's going to be little intricate moves that aren't, but the charts are kind of following each other to a certain extent. Maybe not. Maybe I'm making it up. But
You are
no, I
making
think
it
so.
up a
I
little
think if you
bit.
put them on top of each other, you can see the pattern. Yeah. You can kind of see the two. They're
Spencer,
very
you
high
can do that,
correlation.
right? Spencer,
Yeah,
you're good at that.
yeah.
He knows how to do that tricky stuff.
It's not so tricky in pro, but here we go.
I'm making them do it on the fly.
I got a confirmation from the street. It's 47.6%.
There you go. Somebody rounded. That's the right round
Boom.
math. I mean, 47.6. You round up.
Here,
It's
Dennis.
48.
Dennis, here's your Birkin purple and your Apple.
Look at that.
Candles.
Yeah. So you literally, when you're buying Berkshire Hathaway now, you are really buying Apple. That's crazy
That's
to
hard
think
to
about.
believe.
Yeah, because you think you're buying this, value portfolio, and Apple, to a certain extent, is still seen as a value tech stock because it's not like trading like 50 or 70 or 80 times earnings, but it's not cheap. I'm actually very surprised, Joel, that you were wrong on this. I would have thought he would have trimmed as well. So I'm surprised. 48%. Wow. Something to think about.
Other stocks. He did a lot of trimming, right? He trimmed some Bristol Myers, he trimmed some AbbVie, and he trimmed some Royalty Pharma, ticker RPRX. He also trimmed Visa, MasterCard, Kroger, Marsh & McLennan, and Charter.
I think he just wants to hold Apple eventually. He trimmed everything except Apple. That's 48% of his portfolio. So he's just decided in the long run that he's just going to be owning Apple. Berkshire Hathaway will eventually just merge with Apple. That's a joke too. Bad joke. Not trying to start bad rumors here today. But 48% Apple. Wow.
Yeah, and that's it.
Well, I thought it was like 25 or 30. I don't pay close enough attention. I knew it was a big chunk because it has grown into that. I mean, even in my own investment portfolio, I think Apple is 8 or 10%. I start positions at like 1%. It's just grown into that. So, I mean, at a certain point, if it gets too high, you almost have to trim it just to rebalance yourself. But I would never let something get 48%. It's been the right move, though. I mean, Apple's been an unbelievable outperformer.
Yep. So that's the Buffett portfolio. Again, new stakes in Activision, ticker NU. Flonk sold his stakes in Teva and Sirius, and Apple.
What was the old NU, Dennis? Remember there was a stock NU before this?
No, throw me under the bus on this one. I don't.
I don't know, Spinner. Maybe I'm making it up. Northeast Utilities?
Maybe.
No? Spinner
Maybe.
can help me on that.
You like those utility stocks. Back in the day, Joel traded all the utility stocks. He was like the utility stock arbitrage master over there.
All right,
Okay.
let's go.
All right,
What else?
let's go.
Let's go to main.
I was right.
Here.
It was
we
Northeast.
started with Warren, but what is really the driver here today? You need to talk
we didn't even
about.
talk about it.
It's all Ukraine. It's all the next headline. It's the only thing that matters is the next headline. Doesn't matter what your chart looks like right now, because if they come out and all of a sudden some troops are returning to the bases, that equals 60-point rally in the S&P, apparently. So I just gave away the news, but
yeah, I mean that is the news. It was a report overnight that.
But there's no confirmation here.
There's never nothing.
Somebody is just saying
nothing
that
is
there is
confirmed.
some troops returning to the bases.
Nothing is confirmed, Dennis.
Okay, so
because they're waiting until after the Olympics.
So if you're buying stocks today, you're basically
doing
saying
it wrong.
that the Ukraine situation has de-escalated and it looks like it's going to, maybe not materialize into an all-out war here. I don't know if I'm going to say that, and I don't know if I'm going to bank on that. That's why if I was, looking at this I look at this as an opportunity to sell stocks, because I think there's going to be a headline tomorrow. There's troops still kicking around here, and there'll be some negative headline. Oh, they're moving in. Look out. And the market will start selling off here again. I think today is what is called your classic suckers rally. And a suckers rally is just simply a rally that is on a headline. It's driven by some type of catalyst and then usually retracted or given back very quickly. So I think there's going to be a headline in the next day or two. Just, not that I know anything, but, we've had headlines coming from Ukraine, a lot of them lately. I think it's going to be a negative one coming out in the next couple of days probably, and it'll drive the market back down. So if I was in stocks and I was too long, or I bought the dip yesterday, I would probably be selling this rip today.
All right, I just want to give and I don't want any heat from this, but this is my geopolitical situation and take on things with the world economy. He was just testing NATO after it'd been weakened over the last few years. All right. But Biden and the allies, they kind of said, hey, we're kind of getting our act together. And so we backed off a little bit. Of course, they're selling as much oil as they can over $90, right? I mean, high oil is good for them. But to me, like just in my long, observance of wars and ground wars, I mean, for them to go in there and do a ground war in the Ukraine with the way they're kind of, I mean, that that would be that cost a lot of money. It could be an economic disaster. They're already teetering, and he's going to go back. Who wants a ground war in the Ukraine? That's what I think. They pumped
I just
oil.
think it drives oil prices too, though. Well, the one consideration is what is Russia's biggest business? I mean, we'll look at what oil has done with, the worries, obviously, about the
Yep.
Ukraine situation. So he benefits from, in multiple ways here, from, from
But
going
that
into
benefit could
Ukraine.
be offset if they have a ground war. I mean, in the Ukraine. So
We don't know where this is going to go.
No
I'll
way.
just say I don't think it's over. So I don't think I think today is a relief pop and saying, hey, maybe we're not going into a hostile. It's not going to be as hostile as it once was. If the troops are backing off. But this is to report. I don't even know what you can believe coming out over there. So I think it's an overshoot. As much as maybe to some people's other point is maybe we overshot selling it off as much as we did the last couple of days. Maybe this is an overshoot. But if you just take us back to the technicals, and we can use technicals actually after the fact, we have the
Yes.
headline. I mean, let's do a 50% retracement. So we were 457 on SPY. Take us down to 435 on SPY. That's 22 points. You rally 11 up from there. You're 445, 446. We're just getting back to the 50% retracement from the sell-off the last 3 days. And in my experience, it's always better to fade the 50% retracement, meaning, when you get up, the stock's moving waves, right? So you move it up, you move it down, moving up. Stocks are in uptrends. You're buying the dips. So it's actually, we've been trending down here to a certain extent, not overall on SPY, but it's starting to round. And I mean, you just had a 50% retracement move. It was a big sell-off the last 3 days. So you get a little relief pop here, a little bit yesterday afternoon into today. I think and maybe it continues on. We're never going to get it perfect, but I think you're lightening up stocks into this if you're trading.
It's already happening right now. 44.60, just a little bit, nothing major. 44.68. We're trading 44.55 and a half. So we already have backed off a little bit.
Where was I about to go with that? Oh yeah, sorry. I was about to move us on to the next topic here. I was about to.
Well, that's good. Keep us moving.
I was going to move us on
Today.
to Intel. Intel back in the news, doing some more M&A here. They are acquiring, per the Wall Street Journal, Tower Semiconductor, ticker TSEM.
Wow.
This is an all-cash deal. $53 per share is what Intel is paying for TSEM. Recall that Intel has been, they're rumored to buy Global Foundries. That didn't happen. They just invested in that new plant in, I think, Ohio, I want to say. And they've bought Mobileye in the past, which I guess they're
and this is a confirmed deal now. It was broken by the rumor. It broke yesterday from the Wall Street Journal. We're now confirmed. Do we have an actual price?
I should have clarified. Yeah, it was reported last night and then confirmed this morning. So, yes,
What's the price?
53 is the price.
Is it stock or is it cash?
Yes, it's cash.
Wow, these risk arbs, man. 53, and that's trading at 47. We are not in Kansas anymore because they put serious discounts on these, and maybe it's the inflation. Maybe it's a time value of money, but there's just, or maybe it's just the fact, like, are they going to block this deal too? Like, is that what they're saying? Because a 53 at a 6-point discount on a $46 stock, it's like a 14%. It's a pretty good. That's a pretty good discount. 13, 14%. But I mean, we saw it with Activision Blizzard too. So I don't know. You think there's risk in this deal not going through?
I don't know.
Intel needs to do something.
Yeah, this is a little bit different. Where on that Activision Microsoft deal, never traded over 86 with a 95 price tag. But the only thing I could give you, folks, is when there's
who the hell bought it at 54 this morning?
You took it right out of 55, Dennis. When you see a cash deal for 53. Don't pay 55. And don't say I never gave you good enough. That is an investment. Don't say
there's a good hot tip for you. What? Who's running these news out? They must just be running that the deal and they're just buying and not seeing the price or something. Like, what the hell?
That would be a
They pay
bad thing not to
$55.
put in an
That
algo.
news algo, and it's wrong on earnings. There's a couple out there that are just terrible. There's some really good ones. Don't kid yourself. There's some really good news algos too being run, probably by the smartest people out there. But anybody can write an algorithm now and employ it in the market. That's what we're into. And there are some dumb ones out there. Don't pay 55 for a 53 takeover in this environment. You're not getting a big. They say, oh, 55. Well, we got 53. Maybe we're going to get more. No, we're not in 2020 anymore, guys. We're in 2022. There is inflation. There is time value of money. There's risk that deals don't go through, and they put a discount on everything anyways. So
just like they're all coming for.
Don't pay more than the cash takeout price. Hot tip from Joel Elconin.
Yeah, just like everyone wants to pay more than 64 for Kohl's, right? They're going to
well, that's it. It's 58. It trade up to that price too. So the play on these initial headlines, they get up those cash takeout price, ring the register, get the hell out.
You want to look at Fun while we're at it, because they had a takeover rumor. And
we have to clarify here. Are we talking Cedar Point Fun, FUN, or PH?
Yes.
Like pretty hot in it was a PH Fun.
Pretty hot.
Cedar Point.
Cedar Point. Sorry, FUN. Cedar Point Fun.
Cedar Point Fun. Okay,
thank you.
Fun.
No, but they had a rumor that SeaWorld was going to come in and buy them.
Oh, yeah.
And that's not confirmed at all, but the stock keeps on going higher.
They got a reopening trade that's going to be vicious there, too, though. I mean, if I was in the local area, I'd be going to Cedar Point here, too, because we've been cooped up forever. But so the reopening trade is going to help all of these companies. Yeah, I don't know. You pop this much on rumors here and it hasn't materialized yet. I ring the register on all this stuff. But maybe I sell too soon. Maybe I missed the last dollar. Yeah, I wouldn't chase it. I wouldn't chase it either.
If you want to ring the register, if you're a long MoneyGram, MGI, that stock is halted right now, but it's going to resume in 2 minutes.
What's the news here?
They're getting taken over. Madison Dearborn Partners for $11 a share. So MGI halted to resume at 8:30. So that's in a minute and a half now.
Don't pay more than 11.
Don't pay more than 11.
That's my tip. When not investment advice, but I would just say as a trader, when the cash takeout price is 11, I don't pay 12. So we'll see what happens. Obviously, probably going to be a discount. But this is. Hey,
Dennis, did you ever go to Boblo Island?
Yeah, Boblo was awesome.
Yeah,
I love Boblo.
Yeah, too bad that closed.
No, I know that was awesome. It was right. It was half American, half Canadian. Really, it was right in the middle of the Detroit River. So Boblo Island. It was a poor man's Cedar Point. So we went there a lot. Didn't grow with a lot of money, so we went to Boblo a lot.
If you care about such things, we are going to get a PPI in a minute now at 8:30.
Ooh, Dennis, PPI.
Go wide.
Hey, producer prices are going higher. They're expected to rise.
Okay, I'm actually scared on this number. I am going to go wide because we have seen this market. Yeah, we know how this market can roll sometimes.
All right. Okay, where it fit with. You already see some profit taking here going into the actual report here. We're 14 points off the high. Where's my trusty calculator?
What a setup, actually. Just 30
for
seconds.
For a crappy number, here. Right? It'd be like, everything's going back down. I should have sold.
I wouldn't want to own stocks here right now. Just my opinion. Okay, I'm going to.
Right.
Wait, in the span of 30 seconds, we went from, who cares about PPI to, I got to go trade this number. So anyway, as I was saying, expectations are for PPI to have risen 0.5% in
it's going to be more
in January. Let's see if we actually get some movement off this. Let's see if we actually get some movement. I don't
Okay. Hot number coming out.
I'm not convinced that we will.
It's hot. It's hot.
We got a few different numbers coming out at the same time here. So Empire State Manufacturing, I don't care about that. I'm not seeing any movement, and so I'm
seeing someone they hit the sell button first.
Oh, there we go. There we go.
44, 46.
Oh yeah, a little hot. Okay, so we had a hotter CPI, now a hotter PPI. So producer prices did rise 1%. Month over month versus a 0.5% estimate. What else did we get here? Some other numbers for you. Year over year comes out to a 9.7% increase versus a 9.1% estimate. That 9.7 number is in line though with December's year-over-year gains. So it's not as if PPI is getting worse; it's just not getting better. So yeah, I don't know.
We hit it. They hit it off the. They hit it down to 4, 4, 4, 6. Nothing there. I mean, if you guys can see what I'm looking at, I had nothing above Monday's high up to 63. I had no, and usually I like to throw something in there every like 10 or 12 handles. There was nothing I could find between 28 and 63 and a quarter. That's a big, big open area. Coming off the high like this, I'll get rid of the. Get rid of the 1 minute. I know not everyone likes that. To me, this just kind of reinforces what we were talking about before as far as like this is just a gift. This is a 60, 70 point rally overnight on information that we don't even know is true. So I think that's it. That 44.68, boom, that's even looking like a better number now. Pulling back, if we drop another 20 handles, you'll fall into the top of Monday's range. I know there's not really a gap area because it's the way the SPUs trade on a 23 minute or 23 hour and 15 minute cycle. There's truly no gaps, but some people start to look at it that way. Now you're gonna have your offers stacking up here, little rallies. The rallies could be a little tougher to sell here. What else? Let's see.
Leaked a little bit.
Little bit. Nothing major. Nothing
Yeah.
major. Were you able to get anything off there?
No, it was pretty. It was no, not really. So it was pretty small.
All
6,
right.
7 point drop. We're kind of just settling in though, so we're still chopping around though. So there's still some movement here.
All right.
MGI reopened 1065. So they listened to us. The algos didn't pay over 11.
No,
At least
but it
they
went
didn't.
to 1075.
Oh well, that was closer. At least 1075 is not 11.
That's true. Hey, you know what we can do? We can bring on our guest now. I see him here backstage, Michael Pachter, senior equity analyst at Wedbush Securities. Been covering the gaming and streaming and media space for quite some time, and we always love having him on. So let's get Michael Pachter on the show right now. Mr. Pachter, good morning, sir. How are we doing?
Good morning, guys.
Michael, I have one pressing question for you.
Oh boy.
Did Warren Buffett consult you before he bought Activision?
Yeah, everything he does, he calls me first. No, you were talking about discounts to acquisition price, and clearly there's an inflation component, there's a deal component, deal risk component built in. I think that the average risk arb fund who's talking to a white shoe law firm that's very, very experienced in M&A is talking to a partner who's done, 100 M&A deals and who has seen what the FTC and Justice Department question, yet they completely lack context in the games industry. So it's really easy to look at Activision if you've never played a game before and say the industry is console and PC games. And that's it. We're going to define the concentration as console PC, which is a $20 billion market. If you define it as such, then Activision and Microsoft get above 50%. I mean, they just do. And that's a problem. So clearly Microsoft would have pricing power and the FTC will block the deal. If instead you actually look at Activision's business, which is, Microsoft's business is console PC. Activision's business is console PC, desktop free to play. They have a game called Call of Duty Warzone, and they have some called Heroes of the Storm. And they also have a ton of mobile, and they also have a subscription service. If you add all that up, the addressable market's more like 150 billion, and the two companies combined are about 17, which is nowhere near the FTC threshold to challenge the deal. So on its face, if you have an M&A lawyer who has actually looked at games, he'll tell you it's going to get approved. If you have an M&A lawyer who is, typical lawyer, gray-haired 50, 60-year-old guy who's never played a game in his life, he's going to tell you no chance. I happen to have been an M&A lawyer back in a prior life. I would say I would put the odds of this deal going through at 99.99%.
Oh wow!
But
All right.
with the caveat that everything that Microsoft's been saying publicly the last week or so, which is we're going to continue to produce Call of Duty for PlayStation, That's not going to be an offer in a blog post at Microsoft or in a tweet by Phil Spencer. That's going to be an FTC consent decree, and Microsoft's going to be required to commit to do that for probably 5 or 10 years. My guess is 10, with the possibility that the FTC is going to ask them to take every game that has ever been produced for PlayStation in the Microsoft portfolio.
Can they
So
do
would
that?
include the Bethesda stuff.
Can they do that? The FTC can say that?
Sure. FTC can say whatever they want. Microsoft can say yes or no. If they say no, then the deal gets blocked and they end up in court trying to sue to get the deal done.
All right.
If they say yes, the deal goes through immediately. So I would say by year end, the FTC comes out with a list of conditions. Likely you're going to see those in June or July. Microsoft's already signaling that we will acquiesce to every condition. And I frankly think that Warren Buffett's lawyers are smarter than the Risk Arb's lawyers. And his lawyers said, this deal is going to get approved. So he's looking at an $81 stock, and he's going to cash out for 95 in 10 months, which is about a 20% annualized return. Not bad.
Well, he bought it last quarter. That's not like he knew.
But he's saying if he's still holding it, which we don't know if he is or not, if he rang the register. But maybe from a value perspective, it does.
Yeah, he probably didn't. He probably didn't buy it for the deal. You're right. But he probably bought it for the same reason Microsoft bought it. That he saw a $95 value at 57 last quarter.
I mean, 20% return sounds pretty good to me too. So, but again, we are not in Kansas anymore, meaning there is some inflation there, and there is time value of money concerns. I mean, go back 3 years ago, nobody cared anything about the time value of money, but all of a sudden with inflation running at 7.5%, you're like, okay, well, it's 5%, 20, it's still pretty good. So, but you think even, Michael, even if this was a standalone company, if the deal didn't go through, you had a price target of higher than this prior to it anyway. So you like Activision, even if it didn't go through.
I think 110 or 108. So yes, absolutely.
So you like it no matter what.
Yes.
Michael, we just lost your camera there for a second. Hopefully we can get it back.
Was that you guys or me?
No, that's you.
Look at that. Start cam.
We always blame everybody else.
It's okay. I didn't touch anything, I promise.
Michael, you recently added Unity to your best ideas list. Can we talk about that and why?
Yeah, there's two reasons. The immediate one is that when Apple made its IDFA changes, identification for advertisers, it doesn't allow advertisers to track activity from consumers from app to app on the iPhone. There was a lot of concern among investors that the ad tech companies are somehow going to lose out. And maybe that's true for generic advertising delivery, but Unity is specialized, and they focus on delivering ads inside mobile games. And because the Unity engine is used inside of 70% of mobile games, they're a very likely partner for most of those guys to deliver ads. So our thesis, which is playing out, was that mobile advertisers would stop advertising as heavily on Facebook, and we're seeing that happening. And they would shift those ad dollars to in-game. And so the only impediment to my thesis being right was that the mobile game companies were reluctant to allow people to advertise in their games. And then the thinking was, I make a crappy game and I've suckered you into playing my crappy game. If you see an ad for a good game, you're going to stop playing my game and go play theirs. And if the analogy would be like CBS television network allowing ads for an ABC or an NBC TV show, which they don't do. Absolutely idiotic, because the guys who run those studios or those networks seem to think that people only watch one channel. And, unless it's Fox News, I actually think that's just a stupid way to think things through. People don't stay on CBS all day, but they still don't do it. So that same mentality was at mobile game companies. I thought the mobile guys that I know, Frank Chabot at Zynga among them, was smart enough to figure out, hey, we've got this inventory in our games. Let's sell it. Let's see what happens. Zynga just printed 560 million or something of ad revenue last year. So really a big number. Activision printed way over 300 million, and EA is on track to do over 100 million. So suddenly these guys are taking ads. Somebody has to deliver them. That would be Unity. Facebook losing share. Somebody's picking it up. That would be Unity. And so I think Unity, and we added Iron Source as well. Those two guys who specialize in ad delivery inside mobile games are going to benefit immensely. The second reason is I actually think the metaverse is going to happen and is a thing. And it's sort of like, picking a winner in a war. You don't really want to pick which side's going to win. You want to back the arms dealer because he's going to sell his bullets and weapons to everybody. That's Unity. So if the metaverse ever becomes a thing, Unity is right smack dab in the center of it, and they're going to thrive. So I like it immediately for the IDFA change opportunity. I like it long term for the metaverse opportunity.
Do you cover Roblox? We're getting asked about that in the chat, and they report earnings.
We have it. We have a model being built as we speak. So I haven't yet reviewed it. I can tell you that I know about them, no rating or recommendation, but happy to talk to you about their core business and their strategy.
I think people were asking mostly because they report earnings tonight. They want your take, but if you haven't really looked into it, that I don't.
My real take is that kids who were stuck at home with remote learning during COVID were probably not doing what they were supposed to do, every minute that they were on screen, and they were probably playing Roblox a lot. And as they slowly migrated back to school, they're probably not playing Roblox in class as often as they were at home. So I think you saw that last quarter. I think that while they may see a sequential uptick in activity, I think they're going to continue to disappoint until they stabilize in a post-COVID world.
Okay, fair enough. There was another one that was coming up in the chat, and it was
Skills.
It was skill. Thank you, Joel. It was skills. I know you have an outperform rating on this. You're pretty bullish on skills. Has anything changed here?
No, it's another one where the opportunity is immense, and I actually think they have a very good product, and they have gigantic barriers to entry. So I don't see anybody taking share from them. The real problem is, and you asked about Roblox as well. Roblox and Skills each have a business model that doesn't resonate with the guys who create the content that needs to be on their platform, which is that Roblox charges 70%, Skills charges 75% of the revenue that they generate, because Roblox and Skills bring the audience to the games.
Yeah.
And the norm in the industry is the 30% that Apple and Microsoft and Sony charge. So game creators don't want to pay more than 30%. And as you saw at the Epic Apple suit, they don't even want to pay 30. They definitely don't want to pay 70 or 75. And Skills says, well, our value add is that we bring the audience. That's true. But if you have a game that already has an audience, why would you ever put it on Skills and give away 75%? So the killer app on Skills is Words with Friends or Candy Crush that aren't there. And if they were there, every match of Words with Friends ever played is you against somebody else. Would you bet $1 to prove to your friends that you could kick their butts? Yes, of course you would. So Skills is able to eventually adapt the split and say to Words with Friends, we'll take you on the platform. You can have 70%. I think they get them instantly. And I think Skills revenue goes up, tenfold. And the stock goes up fivefold quickly. So I like it because I think that potential is great. I think people really do want to wager against one another. I think they want to enter competitive tournaments and see who can beat their friends. And I think that's true of every game. And I had pushback from an investor who said, well, how many people actually think they're better than their friends at games? And the answer is all of them, 100%. There is no gamer who doesn't think they're better than everybody, all their friends at some game. We're all good at something. I happen to be really, really good at Empires and Puzzles and Candy Crush and Fallout. I would bet anybody anything that I could kick their ass on those games. So, but there are games I suck at. I suck at Call of Duty. So it's not, we don't think we're better than everybody at everything. We think we're better than everybody at the one we like the most. So I actually think Skills has a brilliant model, and I think it's going to work, but my God, the stock hits new lows every day. When it hit 20, I thought it was done. When it hit 10, I thought it was done. When it hit 5, now it's under 4. So I don't know.
I mean, that's the market environment we're in, though. If you nosebleed PE, or if you're not making money at this current time, they're throwing it out. So there's got to be a lot of babies with the bathwater getting thrown out here, and maybe this is one of them. And Unity's really been the same thing too. I mean, it's been hit down, $200 a share. Now it's down to $100 a share. I mean, there's got to be some opportunities out here as well.
Yeah, Unity is obviously not profitable, but they're close. And it looks to me, they've guided that they will be profitable in 2023. My model has them breaking even this year in a quarter and making a profit in a quarter. So I have them kind of turning at mid-year, and their guidance is pretty conservative. So it's hard to wash that one out and say they'll never be profitable. The dream with Unity is, they're at $1.5 billion or so in revenue, and the stock's trading at 40 billion. So people are going, wait a minute, that's just crazy. They need to make at least 2 billion to justify this, and they're only doing $1.5 billion in revenue. Well, they'll make 2 billion when they get to 5 billion of revenue, and they're clearly tracking to that.
There's
So
big margins there,
you have
correct? Like usually
visibility to
these
that
software,
in 3-4 years.
the software companies usually have big margins. I mean, that's one thing to consider. It's not like,
Yes.
like 40% margin is what you're saying it's possible like that they're going to have on this. So if they can grow that revenue, all of a sudden it doesn't look like such an expensive stock.
Right.
I was following this stock, and I thought like the NFL deal, skills, going back to skills here, I thought that would be a saving grace for the company. Is that just not turned out to what it was supposed to be, or are there some results coming up later on? What am I
Yeah, it's
missing?
definitely delayed gratification. That deal is a competition among game developers to make a game that gets approved by the NFL and embraced. Apparently, they have hundreds of submissions, and they've narrowed it down to a handful of finalists. But again, whatever that game is, and let's say it's the best NFL game ever made, it doesn't have an audience, so you're going to have to build one. Would you rather put Madden Football on there and give EA 75% of the revenue, or would you rather put on your own NFL game and you keep 75% of the revenue? I'd rather have the one with 6 million players. I mean, so again, I agree. I think people see NFL and go, well, wait a minute, Madden's popular, so this will be too. But why don't you just sign deals with the established brands? Who cares? Put them in. It's sort of like opening up a retail store and saying we're only selling our own merchandise, which was the Gap back in the day before they picked up Levi's. So, before you guys were born, 1985, I think they added Levi's. But you don't want to sell only unbranded merchandise. If you sell brands, you're going to get Foot Locker wouldn't survive if they didn't have Nikes. So, these guys should start letting Nike into the store and watch their sales go up. Williams-Sonoma doesn't sell private label. They sell brand name stuff plus private label.
Michael, before I let you go, Playtech, you saw you had a note on that one. PLTK, I think you had a note out today on that. And you were intermediate term bearish, but potentially short term bullish. Is that right?
Playtika, they're going to beat the quarter, I think.
Okay, so
they made a mistake. They came out public and the stock went up and went straight down like everything else. They're valued at about half of what Zynga's valued at, Zynga's takeout. So Playtika looks pretty good if you think that there's any more M&A activity, and they're the same size as Zynga. They're not good at advertising, and that's big upside if they ever figure it out. But the short term versus intermediate term, they made a mistake in the September quarter when they guided to it. So when they guided back in July to September quarter, they missed. And so out of the gate, they had a miss. And I think they've learned from that. So I expect the full year guide, because they're a calendar year, to be wimpy, because I think they got burned so badly missing a quarter, they will never guide to a number that they aren't 100% certain they will beat. So I expect they're going to guide 100 million or so below the street for the year, and that could be a risk on the earnings call. They have an analyst day. They're reporting March 1st. They have an analyst day March 3rd, and in person in New York analyst day. So I expect that when they get to the analyst day, they're going to give us a multi-year plan and show us how revenues are going to go up like crazy, and the stock's going to rip. So it's a 1 or 2 day issue, reporting on March 1st in the morning, and then analyst day in the morning on the 3rd. So opportunity to buy it on the 1st and 2nd, I think.
All right. PLTK is that one. Michael Pachter, equity analyst, Wedbush Securities. Michael, always a pleasure.
Thanks, Michael.
Coming on.
Thanks, boys.
All righty. It is 8:50 here. There's a couple more headlines I wanted to cover quickly. Just as Joel and I were wrapping up the At the Close show yesterday, I saw Monster just blast off out of nowhere.
Yeah.
And there was this rumor that Monster and Constellation Brands are having some merger talks. And this is totally unconfirmed here. And I think the stock gave a lot of those gains back. It did. But it spiked up. How high did it get last night, Joel?
It got over $92.
Oh, boy.
As all goes, get excited.
Who reported that? The deal reporter?
I don't even. I couldn't tell
The
you.
pump and dump
I think
report?
it was
Oh, we don't
Bloomberg.
say stuff like that.
It was Bloomberg, I think. Bloomberg reported that they're having discussions.
I mean, you obviously have certain, Bloomberg, Wall Street Journal. These are high end, where the rumors are coming. And they have other mid tiers. Sometimes they get them right. Sometimes they don't. Sometimes, there's track records, obviously. I don't know who this is coming from too, but you've always got to look. Coming from the Wall Street Journal, coming from Bloomberg, are serious rumors. There usually is something to them. Not always, but there is something, usually something to them. You're just getting it from some random, tweet. There's a lot of people who have opinions on stuff, or they think they know something, and then that's not as much. It's the same thing, in the sports world, really, too. Yeah. You get a hockey trade, TSN's, breaking a rumor. It's serious. You get, some, blogger breaking something. It's never usually materializes. It's kind of how it is in stocks. So you're buying stocks up $10 on rumors like a monster. This isn't a high growth business. This isn't something that's getting a 30, 40, 50% premium. So you pay up 10, 12, 15% for something on a rumor, you're giving up all the edge right away. So 92 was up there for a second, and then it came right back down. They were buying Constellation on this. I actually last night too. ST Zebra was trading up, I noticed last night as well. But again, we have no confirmation of any of this. So you get these opportunities. STZ traded $240, and they were potentially going to be the acquirer probably. So
who drinks Monster beverage? Still,
well, I don't actually know. Let's find out what they own.
There's a lot of people, because that actually makes some money. Joel, what's the PE on Monster? They make some money.
I wait one thing at a time. I'm looking at what they own. What other drinks they have besides Monster? Because I haven't had a Monster, to Joel's point, in quite some time. As to the PE question, and then ST forward PE of 28.
Not crazy.
And as far as brands, it's all energy drinks. Brands I've never heard of, honestly. So, Full Throttle, NOS, Burn, Relentless, Rain, Mother, Predator, all energy drink brands. I've never heard of any of them, so I don't know. Anyway, so there was that headline. There's a couple other headlines this morning that I know we say this a lot, but if it was a year ago, these stocks are up 20-30% this morning. Space has a headline that they're taking starting tomorrow. They'll be taking accepting ticket sales to the general public for their launches.
How much?
I don't know if they reduced the cost.
They didn't say. I'm looking at the press release.
We're me and Joel looking for that discount. $200 to space ticket.
Joel, it's initial deposit of $150,000 and a total price of.
Let me check my checking account there.
$450,000.
Pass that with Lisa.
How about is there a buy one get one free or a companion flight? Anything like that available? No. Gosh darn it, I don't know. I think Jeremy took. We're gonna have to get Jeremy on. I think is it Friday? Maybe he's on, because I think he did book a reservation on something. I can't remember what it was. We'll ask Jeremy.
Yeah.
He comes on
and then
going to space.
Fisker.
That's how rumors start.
Fisker FSR had a headline that they are now accepting reservations or pre-orders for the Fisker pair. The pair.
Fisker, right?
Yeah. The Personal Electric Automotive Revolution PEAR pair, starting price of just under $30,000 before taxes. So anyway, Fisker shooting higher, but again, if it was a year ago, Fisker would be at $13 by now, but it's not.
This is the environment that we're in. We're going to see, and I've said before, out of all these EV startups, I like Fisker the best. I sold them all back in November because it looked like it was starting to get rough. It looked like we were getting into an environment where I didn't want to own a lot of companies that don't make money. And that was a correct call. Will I get back into Fisker eventually? I think I will. I haven't seen that turn, though. I don't think I need to hurry back into this position. I do believe that Fisker is going to make cars. They have the deal with Magna, so they have the path to production. I think we're going to see Fiskars on the road. I do think that there's a story here eventually again, and I think they're going to get some revenue. So I like this company. I'm not sure I like the stock yet, for the simple reason is that I don't know if we're in this environment where we can be in companies yet that don't make money. We have been punished in those companies, and I've had a couple of them punished as well. So we're just not in the market environment that's maybe going to be taken off 12, 15, 18. We might get to that environment again, and obviously we'll add risk at that point in time. But it seems like every time we look like we're turning the corner, and all these stocks that don't make money, that they just pull the rug out from under them again. Too many bag holders.
You were really patient with that one, Dennis.
I was in it a long time.
Yeah, you were.
I actually didn't want to sell it. I really didn't. And then everything started breaking down. This was back in this is early December. And I think I sold the last of it at like $18 because it just felt like they were hitting everything. I looked at my portfolio, and if it wasn't making money, I dumped it. So I was like, I actually like this company, but I'm like, they are just dumping all stocks that don't make money, and I don't want to own any of them. So at that point, I don't know when it's safe to come back into the waters here, but I feel like the sharks are still swimming out there, and they're going to bite my feet off. So I'm not even dip my toe in for that reason. So I'm just laying back, waiting for my opportunity. Give me the sign that it's turning. But right now, I still see the same two major problems in the driver. Interest rate concerns are not going away anytime soon. And now you have Ukraine problems, where we're talking about war. So both of those environments are just not that, that I want to go risk on here. And I think that's why every rally, even the overnight rally that we have right now, is already starting to fade.
Yep.
I mean, you've got to be taking the opportunity on the rips to lighten up. If you are all in, you don't want to be all in this market. You can be invested. And you can be invested, but you don't want to be on margin and going all in, and we're turning around, we're going back to 2020. I don't think we're going back to 2020 anytime soon. There's simply too many bag holders, too many people have gotten harmed. I still think even crypto, it's had a nice rally here overnight again, but I'm skeptical there as well. Just, and long term, maybe not, but short term here, I don't think you got to hurry into these trades.
High of the day, you don't know for sure, but now you backed off 23 handles off that high. So that means, some people did get caught up there. Oh, we're going to 4,500 today. So things are going to thicken up on the upside a little bit. Now on the downside, you're still up over 1%. You're still up over 50 handles. Are you gonna buy Apple on the open and then hope it doesn't? Is that gapping up? Yeah. You're buying Apple now. You're risking the fact it could go down and touch the top of yesterday's range on a one swoop down to 169.31. So I still like the top of Monday's range, and that's in the 44.20 handle, and that coincides with mid range. So that's why I like it. I just don't see a point between let's say 44.30 and 44.45 where you have defined risk. So that's at least what we're looking at here. But I'm going to hop off, guys, and I'm going to go over to Pre-Market Prep Plus. We did not do any tickers today. So
we missed a bunch. People asked about Airbnb because they report tonight. The earnings are going to pick up once again, right? So it was very light yesterday. It's very light this morning, but we've got Airbnb. I'll bring it up on the screen here. We got Airbnb.
Big companies.
We got Viacom.
Yeah.
Here we got Win. Roblox we discussed. Lazy Boy, I'm going to make a note right now, Dennis. Tomorrow morning, you're going to tell the Lazy Boy story.
Oh, gosh. You got to schedule 20 minutes for that.
It's been 2 years since we've told the Lazy Boy story.
All right, I'll tell the Lazy. You got to give me a 5-minute block.
I'm running it in the doc for tomorrow. Tomorrow morning, Shopify, Kraft Heinz, the Trade Desk, Garmin, Hilton. So, earnings picking back up here. But that'll be a wrap for our show today. I do want to plug once again our brand new YouTube membership program. If you don't know what I'm talking about, go to youtube.com/Benzinga. You'll see that button right there on the homepage. It says join. I see some people already did it. Ranjan, Riffraff, Shelly, a few others in the chat. And what that gets you, we only have one tier up right now. It's $4 a month. And what that gets you is custom emojis. Right now we've got me, Mitch, Aaron Bree, and Hot Stocks League. We'll be adding more, though. We'll also be adding other benefits. We'll be doing some exclusive content. We're going to have some membership-only chat days going forward. Nothing yet, but going forward, we will have that. So check it out, youtube.com/Benzinga. And if you want some custom emojis, there you go. Nobody asked for that. Nobody said, hey, I want an emoji of Spencer, but we live in a society. So that'll be a wrap for our show today. Thanks to our guest, Michael Pachter. Thanks to all of you in our chat. Hey, check out Benzinga Pro, guys. You can get a free 2-week trial or 25% off. That's right. 25% off Benzinga Pro. I'm putting the link in the description, or I'm sorry, in the chat right there. There it is. I just put it in. I'm going to pin it now to the top of the chat. It should have been there all day. There we go. 25% off Benzinga Pro. Use that link and do it right now. How are we doing on likes for the day? We're at 300 something likes. Is that right? 345. Let's get to 500 likes in the next 10 seconds. That would be awesome. Live trading with Benzinga is going live next, so stay tuned for that. Please remember, all the information from our show, from every show that we do here, is meant to be used as informational purposes only, not for investing or trading advice. And I'm going to hop live trading with Mitch, Zunaid, Ryan, going live in a couple minutes. Everyone have a great day and good luck at the open.